Today in crypto. Following Ripple's unfolding case with the U.S. Securities and Exchange Commission, SEC, investors' uncertainty is on the rise and many have chosen to walk the cautious path. On this note, many investors are abandoning the Ripple ship. Recent data from Coinmetrics, a crypto and blockchain data provider, reveals that the number of addresses holding up to 1 million XRP tokens has dropped sharply in the last 2 weeks. The firm confirmed in a report that the number of addresses holding at least 1 XRP dropped from 1,721 on December 21, the day before the announcement, to 1,567 by January 3. The only logical explanation for this is that whale investors are quickly liquidating their positions amidst the regulatory uncertainty surrounding the digital asset. Source: Coinmetrics. It is clear that nobody wants to catch a falling knife. As illustrated in the Coinmetrics chart above, the number of XRP whales steadily rose from early 2019 before taking a nosedive in late December. Addresses with up to 1 million XRP have dropped to a new low last seen in October 2019. As a result of the SEC's lawsuit against Ripple and its executives, the price of XRP has plunged more than 70%. Hedge funds and exchanges are beginning to distance themselves from the project. Ukrainian football team Dynamo Kyiv is launching its own fan token and digital marketplace powered by blockchain technology. According to a Monday announcement, the team has partnered with Moonwalk, a company specializing in creating digital economies for brands, to release a set of loyalty initiatives for its fans.Continue. Reading on Coin Telegraph. Coinbase is down, experiencing connectivity issues. The homepage of the popular cryptocurrency exchange is currently inaccessible. The new DEX onramps will offer users access to new assets, as well as better liquidity and security. Non-custodial cryptocurrency exchange Shapeshift announced today the integration of nearly a dozen decentralized exchange, or DEX, protocols, a move designed to relieve both the company as well as users of Know Your Customer burdens while simultaneously offering traders superior liquidity, pricing, asset availability and security. Prior to the integrations, Shapeshift required users to undergo a KYC process in order for the company to remain legally compliant, as the exchange served as a counterparty to user trades. In an interview with Coin Telegraph, Shapeshift CEO Eric Voorhees said that regulated services will continue operating on assets that are not currently available through DESs, such as native Bitcoin, BTC, but that all non-DEX trading on Shapeshift will be retired later in the year. By integrating our users directly to DEX trading, it means we are no longer part of the trade. We are not a custodian, a counterparty, or an intermediary of any kind at any step of the process, said Voorhees. Thus, we are purely a software technology company, and in this capacity we are not regulated because we are not engaged in a regulated activity. According to Voorhees, newly supported DESs include popular decentralized finance protocols Uniswap, Balancer, Curve, Bancor, Kyber, 0x, mstable, as well as a half-dozen others. Additionally, the list of integrations will continue to expand as DEX technology permits. The move from Shapeshift is part of a wider trend of exchanges, wallets and other crypto services providing access to DeFi platforms, a movement, according to Voorhees, born of the maturation of a DeFi ecosystem that is rapidly becoming superior to the status quo. Voorhees noted, however, that he is suspicious of centralized, custodial services offering on-ramps to DeFi, also known as SayDeFi, a phenomenon Voorhees thinks will be short-lived. They are incompatible, because they have to censor users and put up access controls. For example, a centralized exchange in Venezuela is restricted by capital controls, while DeFi is not. A decentralized protocol operates exactly the same in Venezuela as anywhere else. By contrast, Voorhees argued that non-custodial services like Shapeshift are a more natural fit for DeFi integrations, and as such, these initial DEX integrations might also be the foundation for a wider series of on-ramps to more varied DeFi products, including, hinted Voorhees, a decentralized Bitcoin exchange service. In the end, providing these services to users is not a perk but instead a market reality. 2 or 3 years ago, Decentralized trading existed, but was not liquid or easy enough to be compelling at scale, he said. The trade war with China homes in on the country's thriving digital payments industry. With just 2 weeks left in office, President Donald Trump has sent out a new executive order targeting Chinese payment apps. The Tuesday order bars United States citizens or people located in the U.S. from using non-Chinese payment apps. It continues the White House's earlier efforts to cut off the U.S. market from Chinese-owned apps like TikTok. Yesterday's order repeats earlier concerns of data collection by the Chinese Communist Party. The apps targeted are Alipay, Cam Scanner, QQ Wallet, ShareIt, Tencent QQ, Vmate, WeChat Pay and WPS Office. The executive order takes effect in 45 days, by which time Trump will already be out of office. Given that his earlier order to get ByteDance to divest from TikTok was stonewalled in court while he was still in office, there's not a ton of reason to believe that Trump will get his way here. The focus on payment apps is particularly significant. Recent moves from the U.S. national security apparatus have definitely indicated concern over China's payment systems, particularly a central bank digital currency with a database accessible by the CCP. Money and crypto as well as the broader tech industry have warned of a Cold War in technology between China and the U.S., including Facebook's Mark Zuckerberg and several leaders of Rippe Labs. While the situation between the two countries is obviously tense, both Facebook and Rippe were seeing serious investigations by U.S. regulators concerned about their operations when they made those arguments, somewhat deflating the effect of their patriotism. While the barriers between the private and public sectors are murkier, China's treatment of the private companies that Trump is targeting is already pretty bad. Ant Group, the fintech affiliate of Alibaba that owns Alipay, recently fell afoul of the Chinese government. Xi Jinping is said to have personally put the clampdown on Ant Group's aborted initial public offering, since which time Alibaba's stock has slipped and the founder of both, Jack Ma, has disappeared. Another giant of Chinese tech, Tencent, owns 3 of the entities targeted by Trump's order: QQ Wallet, Tencent QQ and WeChat Pay. While Tencent has avoided Ant Group's high-profile brushes with the CCP, China's much-anticipated central bank digital currency may well be an effort to muscle in on the business of the country's impressive fintech sector. Hit the like button and subscribe to the channel.